Will 2015 be Gold's Super Bowl year? Who better to have this talk with than Frank Holmes, who joins us from Vancouver today. Frank, thanks for joining us for the Outlook 2015 edition of Gold Game Film.
Well, it's great to be here in a very challenging gold market.
Well said, Frank. Now, before we look at 2015, the bigger picture, let's look short term. We have the much anticipated Fed meeting this week. Frank, could it be a game changer for gold?
Well, I think with the 10-year government bond falling in yields last week is very deflationary, and that will concern the Fed from any raising of rates. So the market forces are strong, just actually because the government's not there manipulating, as they've been accused of, the bond market. So I think that they could have a positive influence.
Okay, so no surprises.
No big surprises.
All right, so on that note, Frank, let's look at opportunities and threats now in the gold market for 2015. Starting with opportunities, here's a trend that we saw pick up steam towards the end of 2014. Countries wanting their gold back in their home country. Now, we saw it with the referendum in Switzerland. Now there's talk that Austria, Belgium, and France may all want their gold back. Do you think this is a trend we'll see continue in 2015, Frank?
Oh, I think so. I think it's all part of the FATCA rules that came out, sort of money laundering rules, and that the U.S. has pushed around the world. And I think there's two factors driving it. Is just the fact that governments want to have those hard assets in their own domain so they can't be easily confiscated by some other government. And two, is the economists, the economic PhDs that are working at all these central banks are fairly cognizant of the monetization of debt that's taking place. The explosion in the balance sheets, in particular what took place in Switzerland. I mean, it's just phenomenal. And then the central bank goes out to lobby and spend money defending their position, which is unusual, and attacking those that wanted to have gold as they couldn't sell their gold. So I think that there are important factors that central banks will continue to want to, own their own gold in their own jurisdiction for rule of law, and B, they're going to continue to nibble on gold.
All right, Frank, looking at mining now, could this be the turnaround year for mining stocks? You highlighted a study in your morning commentary that looked at 4 major TSX venture corrections in the last 3 decades. And according to the study, we are currently in the longest small cap mining correction in 30 years. Could this mean a turnaround for mining stocks in 2015, Frank?
Well, last year I wrote a piece that for 3 decades, only 3 times had mining stocks fallen for 3 years in a row. And last year was that year. Then we had a spectacular rally in both bullion and the mining shares, and everything's petered out. And now it looks like we're going to have the 4th year of mining stocks down. So I think that it's a real struggle, and there's several reasons for that. I think that the regulatory world has changed a lot since 2008. The formation of capital, the creation of the ETFs, that money only flows into an ETF that only therefore flows into the gold mining companies or mining companies that are in a specific ETF. And many of these companies are being orphaned. So I don't see any highlight for that to say this will be a trigger point, except for spectacularly higher commodity prices. That's what it would take.
Now, this was also interesting. From the same study, it highlights that historically, the 3 best months to gain exposure to gold have been December, January, and February. Frank, why is that? And do you expect to see higher demand for gold heading into 2015?
Well, historically, there's Chinese New Year is usually the peak. You have Christmas is a big consuming period, and just prior to Christmas is a wedding season in India. I went to India a couple years back for a wedding just before in the early December. So this is a big consumption of gold. This year, you're going to see the U.S. being a big buyer of gold, in particular jewelry, because of oil prices falling. Jewelry stocks have been on a tear, Danielle, on a tear.
All right, looking on to threats now. And number 1 on the list is U.S. interest rates. With the positive economic data we're seeing come out of the U.S., Frank, do you think that the Fed may raise rates sooner than later?
Well, I think there's so many rules and regulations, just like Bernanke when he went and left and wanted to refinance his home. And he got tripped up on all the regulations now to get a mortgage. It's extremely excessive. So any rise in interest rates merely derails track housing, anyone that's put down money for a house. So I don't think you're going to see rates rise very long. If they do, and I don't think they'll be of a material amount.
And still a threat to gold, the U.S. dollar, all about the dollar story right now. Frank, is this a trend that will continue in 2015? I
think Q1 and 2 looks like the dollar's on a tear, particularly because the rest of the currencies of the world are trying to repair themselves. Look at Colombia. I mean, that currency's off 30%. 30%. Canada, it's off 14%. These have big impact on Americans owning resource stocks. So you're actually seeing Americans selling more so Canadian mining stocks, oil and gas stocks, Colombian stocks, Latin American stocks, etc. So I think over the next year, we're going to get a beautiful, perfect bottom. There'll be lots of M&A work, which will be the trigger that a bottom is taking place.
Finally, I know you were happy with the Dallas Cowboys win on Sunday, Frank, but what do you think could be gold's touchdown pass in 2015?
Yeah, that's most important for investors is we've always advocated a 10% weighting in gold and rebalance each year. So that helps you mitigate this incredible volatility. So what is the volatility? Well, it's a non-event for gold to go plus or minus 15% over the next 12 months. What would that be? That's approximately $150. So we could see gold run over $1,300, or it could turn around and try to push and touch down close to the 1,000-point level. That would be its normal DNA of volatility. I think that if it does come off one standard deviation, it'll be a screaming buy because then it's going to jump 2 standard deviations. I think you're going to see supply of gold mining companies start to decline. You're going to start seeing that very imminent next year.
Frank, thanks so much, and happy holidays to you and your loved ones.
And from Vancouver, we send the love.
And thanks for watching this special edition of Gold Game Film Outlook 2015 edition. We'll have more Outlook coverage for you throughout the week, running until January 5th. So be sure to stay tuned. In the meantime, you can email us, newsfeedback@kitco.com. See you Tuesday.